Hello, it's Brian Shannon from Alpha Trends Blogspot. Today is Monday, October 8th, 2007, and the market has closed. The S&P 500 was down 71 cents as measured by the spiders on the screen. That's about a 0.5%. It did close at an all-time high on Friday, and we're seeing just a little bit of a pullback. We've got the stock, the market that is, above the rising 10, 20, and 50-day moving averages, with the 10 above the 20 and the 20 above the 50. You see that the volume was light today relative to Friday's trading. So the market continues to be in a good uptrend, although it is, as I've been saying, extended in here. That's definitely not a reason to look for a short sale or for the for a top in here. It just means just continue to be cautious and enjoy the gains while you have them. Keep raising those stops. We've got this trend line that I think is going to continue to be important, and probably Friday's lows are going to be an important level of support at about 154.5. So keep your eye on that tomorrow. We've also got the rising 5-day moving average right about in that direction. So the market slowed down a little bit today, but we've definitely got again that 154.50 level, which was this resistance over here and support. Also the location approximately of that rising 5-day moving average. Below that on a daily time frame, or on the 10-minute time frame rather, we've got this level here at about 153.20 that had been important as resistance. This market though is stair-stepping higher nicely. It's making this series of nice higher highs and higher lows. There's nothing here that suggests it's going to pull back, but it is getting extended, more extended by the day. So it's touched this trend line, 3 or 4 times, and typically after that third or fourth touch of the trend line, it will break down. So just continue to be on high alert here. There's nothing that says the market is going to reverse, but with the gains that we've been seeing lately, we're starting to see some of these Chinese stocks, JRJC coming in, CHNR, and then there's this LDK, which is a Chinese solar play, and apparently their inventory or their warehouse was filled with a bunch of junk. And this is a big listed stock. I think that the sentiment might start to shift a little bit in these Chinese stocks, so be very careful. We're starting to see some chinks in the armor when it comes to these Chinese stocks. The SMH, we've got these at trading between basically this range right now of about 37.80 up to 39.10, and really nothing happening until we see it break above that level. Again, the daily chart is looking more constructive. We do have these higher lows and multiple tests of this resistance level. So above that 39.10, that's what could get this thing going. We don't need to look at the intraday time frame on that. The IWM, again, this market is extended like the other ones to the upside. It's been in a great uptrend, higher highs and higher lows since breaking past this 200-day moving average and that little shakeout low that we saw just below it. We're very close to the all-time highs in here as well, and this is the group that had done the most damage to the overall sentiment of the market, I think, when you see that this prior support was acting as resistance. It made it comfortably back above that level. Now these all-time highs are within striking distance. So let's take a look at a 10-minute time frame here. You can see that this uptrend line was broken and then held as a little bit of resistance late in the day. That's just a little bit of reason for concern. We do still have a rising 5-day moving average, so the benefit of the doubt goes to the buyers. But remember again that we are extended here. This $83 level is going to be important. It was the prior highs from last week before Friday's jobs-related move. And if that fails to hold as support, then I think the next level below that is $1 away, basically, at $82 a share. So continue to be cautious, but bullishly optimistic is the way to treat this market. The Qs continue to march higher. Another new high in here. This market was up 0.2% with its 33-cent gain, and we've got multiple year highs once again in the Qs. This market just doesn't really want to slow down, and this one is showing even more relative strength on the intraday time frame as well. I think that when it comes to the Qs, you want to get more defensive tomorrow, below about this 52.65 level. Breaking below that, we could see a drop back down towards about 52.25, 52.10, let's call it. at this prior high, and we've got that rising 5-day moving average that a lot of times acts as support intraday, and that a lot of times that's a good reason to take a look at maybe a 1-minute chart if it pulls down to that 5-day minute. That 5-day moving average on an intraday basis. That's a good time to drill down to a 1-minute time frame and look for evidence that maybe there's a potential bounce about to set up in there. But that's how you want to use your shorter term time frames for those quick intraday scalps.